Good morning from beautiful Lauderdale by the Sea. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals for our, I believe, January 20th update. And today is Wednesday, and a long day it's going to be as well. Metal prices are way the heck up today. Not quite this high, but I'm going to explain why I kind of put this up here. And maybe make a prediction, which I really hate doing, short-term predictions. But I'm going to give it a shot anyway. Well, we know that the new administration's coming in. We know that Janet Yellen's the pick. We also know what Janet Yellen said the other day on ending money printing. She's going to assist this new administration with pumping out as much money to people as they can. And where does this money come from? Well, it comes from the money tree. We all know that tree. It's in Washington, D.C. It just grows on trees. Of course we know that. Anyway, she's kind of said the Green Deal. She talked about the Green Deal. So there's more money going to be pumped into the Green Deal. There's going to be more money pumped into paying people, student loans. You know, who pays for this stuff? Well, it's going to be paid through partly through taxes somewhat, but not much at all, because there's 50 million unemployed people on the payroll right now, government payroll, that are unemployment because the government created this situation. And there's not going to be a lot of taxes paid, so they're going to have to go after people that have the money or are producing money. And those people are probably just going to go gulp and stop producing, because why not? They can just retire and take their money and live a comfortable life. They don't need to have their income stolen from them. So more or less, this is what we're going to see. You're not going to see taxes to a large degree, because most of us are already taxed too much already. And those that are not are going to go gulp. So you're going to see helicopter printing money. And there's Janet right there. I see her little face right there peering out the helicopter and dumping all that free money they get off the money tree to the new D.C. administration. So anyways, I'm not really joking around. I'm just kind of making fun of the situation, I guess. And it's really not a funny situation, but hey, listen, we knew it was going to happen. The problem with the dollar and the problem with the economy has been there all along. Since 2008, they've been trying to fix the dam. The dam keeps getting holes. They keep putting more Band-Aids on it. And what are the Band-Aids? Just printing more money, keeping cheap money, cheap interest rates. Those are the Band-Aids they use to fix the holes from 2008. Unfortunately, they keep getting more holes. They keep putting more money up. And, you know, it ain't getting any better. At some point, the dam is going to burst. And that's what we talk about. We were saying that it was going to, you know, under the Trump administration. I'm surprised it didn't happen sooner. However, you can underestimate the people that can print money. You know, when you have a money printing machine, it's hard for other people to guess when your little sham will be up. So that's the big problem, is making short-term guesses on these things. And that's what I was just talking about, my guess on $2,500 gold and $50 silver. On the short term, it's really tough because, again, never underestimate the people that have the printing press. Peter Schiff did that, made some predictions, and I think his predictions were absolutely right on gold and silver and precious metals, and a bunch of other guys. However, they underestimated, and I think even Peter Schiff said he underestimated the power of the Federal Reserve. And what is the power of the Federal Reserve? Well, there it is right there. Now it is. It used to be controlled to some degree, but now there it is right there. The money raining from the sky. Everyone gets a check. And why do politicians do that? Because they are just simply buying votes. Anyways, let's take a look at this gold and the Fed. This is written by Sprott Money News. I like some of the stuff that Sprott writes. I'm not too happy with my Sprott account, by the way. Feel free to ask me personally about that. But anyways, I do like some of the stuff they write. The year 2021 has begun poorly for us beleaguered precious metal investors. Not really. I don't know why you would say that. And it's enough to make you crazy, as nearly everything is moving in directions contrary to what common sense would predict. Not if you've been watching my show. I didn't mean to contradict what he's saying here, but I don't think that's necessarily true. I mean, think about it for a bit. He says, since the start of 2021, we've seen Trump signed a $900 billion in new stimulus. I agree with that 100%, and we've talked about that. Trump was no fiscal conservative, but standing next to Joe Biden and crew, he looks like a choir boy of fiscal conservatism. However, this is true. He did. And as I've said, this collapse of the dollar and this collapse of the economic system, I don't want to say collapse like Armageddon type collapse, but where your dollar just buys less and less, and everything gets more expensive and expensive. Less people are working. Just a bad economic environment. When I say collapse, I don't mean like Mad Max days. Some people think of Mad Max when they think of collapse, and I'm not thinking about Armageddon either. I'm just thinking of really, really tough times for everyone, and tougher than now, and tougher than we've ever experienced. That's what I'm talking about. I'm not talking about Mad Max days. Let's move on to the next thing. Political theater and impeachment. Yeah, Biden proposes another $1.92 trillion in stimulus. This is all stuff we've been talking about for the last 7 months, folks. The Fed promised zero rates through 2023. Again, yes, they did. That's what we were just talking about with Janet Yellen. More or less, she's just going to be full automatic on those machine gun printing presses. And yet the dollar index has bounced and the bond market has sold off. Yeah, that's temporary. This is what I was talking about too. And again, they make the same comment here. Who is that? Craig Hemke at Sprout Money News makes that same comment. But as I said, dollar strength is only temporary. It'll last a day, it'll last a week, maybe a couple weeks, and it'll bounce back up over time. But the overall trend of the dollar is downward. If you live in a long enough time period and you look at the trend, it's down, down, down. The dollar buys less. Listen, if you're over 20 or 30 years old, and let's say if you're 30 plus years, you've at least had 10 years of experiencing what your dollar buys and what it can't buy like it used to. So we know where the dollar is going. We all do, even if we don't want to admit it at times. The internationally recognized price of gold and silver is not based on any sort of physical metal transaction. That's so 1960s, and that's true. Man, he nailed it dead on this one. Instead, the price is determined through the trading of digital derivative futures contracts in New York and unallocated forwards in London. Unallocated means that there's no gold behind it. It's just a blank piece of paper. So the only way prices rise is when demand for these derivatives outstrips the supply. And that's true. The paper market is really, you've heard the term the dog wagging the tail, or the tail wagging the dog, I'm sorry. In this case, I consider paper markets to be the tail, but they've been wagging the dog since the 1960s. That's because there's all this paper out there in gold. But, don't worry about it. If you own the paper part of it, I would worry about it more. But if you own physical gold and silver in your hands, gold bars, and you have it in your possession, you lack the third-party risk, and you have the security of 5,000 years of good history that gold and silver has as being a stable form of money, unlike any fiat currency, including the dollar. Let's move along here. The big rally last summer was a period of bank reluctance to add derivative supply, and the prices soared. I like that comment, and that's probably very, very true. Reluctant to add more paper, and I can't blame them for that, because that paper market can collapse on them and it bite them right in the ass. Since then, banks have felt more comfortable adding supply, and prices have been driven consistently lower. If you don't understand why the price system was set up this way 45 years ago, perhaps you've not reviewed this cable dated back. Let's see, just 3 weeks before futures been trading on WikiLeaks. Interesting. I didn't see that WikiLeaks thing, and we'll read that later. Additionally, the trading of these derivatives in 2021 is primarily done through HFT algorithms. So, more or less, like we just said, the paper markets are the tail, and they wag the dog, which is the physical markets. But we've known that for a long time as well, folks. Let me get on to my little prediction here, what I'm thinking, and let's move up to spot prices, which are up significantly today. I was really surprised. Since this morning, actually, in the last half hour, 40 minutes, I've seen it go up about 10, 11 bucks on gold pretty quick. Not really quick. Gold can do much higher than that, quicker, but quick considering what we've seen for the last month or two. And the same thing with silver, up 50 cents. It's been quiet for the last 2 or 3 weeks, or 3 weeks probably or longer. So this is a pretty big update for us. My prediction. I think we're going to see this year, and I'm going to step out on a limb. I'm really surprised we haven't seen it in the past, and I was so tempted to say last year we were going to see $2,550 silver. I'm glad I didn't, because again, in the back of my mind, never underestimate this or these people. until they just run out of ammunition. And that's the real big problem, is trying to figure out when they run out of ammunition. And the ammunition is the dollars. When does it just become, man, they're going to make it worthless? Do they keep doing it, or do they realize and tighten things up and screw the economy? They got to do one or the other. They're going to ruin the dollar, or at some point they've got to step in and the economy is going to collapse. Because they're going to have to raise interest rates dramatically and tighten up the dollar. I don't see Janet Yellen doing that. She just said she wouldn't. So for the next 4 years, man, it's money printing, and maybe even, I'm not going to say the collapse, but the decline of the dollar even worse, and we've seen it. So I think we can see $2,500 gold this year, and I think we can see $50 silver. I think it's very possible, given the economic challenges that we see and the people that are in charge. So let me update this real quick again. That was an update a few minutes ago. I'm going to do a quickie update, and up a buck from there. Looks like gold is up 28 bucks from yesterday, and silver is up about 50 cents. So we're at the 25.72 and 1868 level. Perhaps we're on our way again. But again, as I've said many times, you're going to see monkey hammering in this market, what we were just talking about, those paper derivatives that don't exist. When they sell huge quantities of paper, that's not real gold changing hands. That's just a piece of paper, or maybe like a Bitcoin type thing, just ones and zeros in space. It ain't gold, though, trust me, folks. But when they sell $1 million, $2 million, $10 million, $50 million worth of gold in paper, it has an effect on the prices, because that's where we get our prices from the paper market. But the prices do separate. If you ever notice, the higher the premium, that's kind of a separation from the paper markets that the physical markets make. When people are unwilling to sell real gold at the paper market prices, then the premiums on gold products go way higher. Not only do the premiums go higher, the scarcity, kind of like what we're seeing right now, starts to step in, because Krugerrands, as I said, are really tough to get. Other gold products are tough to get right now. So there is some bit of scarcity going on because of a high demand for this stuff right now. Anyways, 1868 up $27, silver up 50 cents, platinum up above that $1,100, and who cares about palladium, because nobody buys it that I know of. So we got some strength in the markets today, folks. That's really about it. Krugerrands are still not available. The next best, cheapest deals for recognizable products are Maple Leafs, and I still recommend them before buying Gold Eagles. And don't forget to watch my video coming up this week or this weekend on why I don't buy Silver Eagles, and I should say it's the same thing about why I don't like to buy Gold Eagles as well. The premium's way too high. Again, my recommendation, since Krugerrands are kind of scarce right now, best deal out there for 1-ounce coins that are readily available are Maple Leafs. Anyway, that's it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 a.m. to 4 p.m. to ask us about gold, silver, platinum prices, or products. Make sure you check out my other videos here, too. I've got like 220 videos. We got these daily videos we do every day, and some educational videos and some other things. And if you hadn't had the opportunity, please hit the like button up there. I'm not begging or anything like that, but it's sure nice to see that people are watching and acknowledging that I took the time and you took the time to watch it, and it just lets me know that you're out there. Hey, thanks for watching again. Appreciate it. Have yourself a great day, and if anything crazy happens today, I'll do a second show. If not, I'll be back tomorrow morning. Thanks again for watching. Bye.